investors at the Treasury Bills markets have shown significant interest in the newly issued one-year Treasury bill as demand for far outweighed offers after Wednesday's 161.5 billion naira auction. Traders at Axis Bank say they expect similar sentiments at today's trading. Uzor Anakebe, Treasury Team Member at Axis Bank, joins me for more market updates. Uzor, thank you for joining us today.
Thank you, Esther.
Well, talk to us about this newly issued one-year Treasury bill. How strong is the demand versus the supply?
Okay, so the auction that was conducted by the DMO earlier in the week, we saw the bid subscription overweight the supply because the subscription was at 1.4 trillion naira, while the offer was about 116 billion naira. So most of the demands in this auction, the demands that were not met in this auction was seen in the secondary market, but we didn't see a lot of off-takers, and we could attribute this to the illiquidity in the market. If you are following the trend, you would notice that the market has been in repo for a while now, and currently yesterday was about 1.4 trillion naira repo. Yesterday was an improvement because of the bond maturity, about 770 billion naira that settled into the system yesterday, improving the repo to 1.4 trillion naira. So we consequently saw improvement also in the OPR and overnight trades. But going into the T-bills market, we've seen a lot of demands. However, these were not lifted. The few demands that were lifted in the March 2025 bill, we saw it at the 19% handles.
So walk us through the rest of the market segments, the bond market, and then we'll head to the FX market.
Okay, so for the bond market, we saw most of the demand we saw in the bond market were in the short-end instrument. We saw a lot of appetite for the 2024 maturity. This was trading around 19.1% handle, and we didn't see a lot of demands in the long tenor securities, and this could be attributed to the fact that we have a bond auction next week, so most of the market participants are quiet, waiting for the bond auction. As you also know, the inflation figures, we're expecting the release of the inflation figures, even though most market participants anticipate that there will be an uptick in these in the figures that we are expecting, but the market will most likely react if the uptick is higher than what is being predicted. On the FX market, we have seen appreciation in the naira by closing yesterday's levels at 1,608 naira to the dollar, and this could be attributed to, one, the liquidity in the market. Even though we saw a lot of offshore counterparties trying to sell FX into the market to purchase their NTB that purchased from the NTB market, we didn't see a lot of off-takers due to, one, the liquidity in the market, and in as much as demand is still there in the market, but most of the market participants are trying to bid at lower levels because of these issues. So we anticipate going into next week for the FX market, we anticipate the central bank will most likely come into the market to play. There are indications that the central bank is looking to intervene in the FX market, and as we also know that with the news that the refinery is coming up in a few weeks' time, we'll see lesser pressure in importation of fuel with dollars. So we'll see more dollars coming into the space. We expect green lights in the FX market in the coming weeks.
For next week's bond auction, what can you tell us? What bonds are on offer, and also the stop rates that investors are expecting, given that there's an expectation that there will be an uptick in the next inflation numbers?
Yeah, generally market participants are anticipating that the rates in the bond auction would go up slightly above what, considering that inflation currently is at 29%, and we are expecting to be at 30 handles, and we also saw that the NTB is already the longest tenor, one-year tenor in the NTB is at 21.12%. So most of the this would be what will be guiding the traders in this space in what they'll be bidding. So we expect that most of the bids will be above these handles to meet up with where the NTB is trading, and also to factor in for the inflation figures. Well, if the results from the inflation comes out less than expected, we might see some bullish runs in the market.
How much traction are you seeing at the corporate bonds market? We know that obviously there's going to be an increase, and we're seeing that happening already, an increase in borrowing by the sovereign, the federal government, and that has taken, of course, benchmark yields higher. And I'm not sure how the corporates can compete with where the yields are at the moment. So I suppose that there might be a stronger push for commercial papers instead. But just give us a sense of what you're seeing there in terms of the level of activities.
Yeah, you remember that in the last MPC, the central bank hiked rates, so this has led to the increase in cost of borrowing generally in the industry. So we've seen we've seen some of these bonds that are being floated by corporate. We've seen a lot of there will be a lot of pressure on them. So like you anticipated, we may see short-term borrowings in terms of commercial papers, but I would like to, the few commercial papers that I've seen in recent time, we've even seen them, the yields going almost at par with what we are seeing in the NTB space. But most corporates are actually slowing down on borrowings and trying to look for other internal sources, probably through equity, to boost their capital needs at this time, because cost of borrowing at this time is very high for corporates, and to be able to meet up with their obligations, considering also where the FX market is for most of these corporates that need to import some of the raw materials that they will need to carry out their production activities. So we are seeing lower appetite for issuing of bonds like this, and most of these corporates are also looking inwards to do some other structures to be able to raise the much needed liquidity to carry out their operations. Right.
Well, speaking about appetite, I wanted to just get your opinion on the conversation around the potential Eurobond Eurobond issuance by Nigeria as early as April. This year. As you know, the federal government has spoken to a number of international banks to, advise on when best in terms of market conditions. So just your thoughts in terms of, we sometimes, from time to time, we see Nigerian Eurobonds, current Eurobonds, doing well at international markets. So just your thoughts on, perception right now for the country in terms of country risk profile, etc., versus, our ratings, and if investors will be demanding a high premium based on current macro indicators of the country.
Yeah, looking at the current indications, the central government is looking at borrowing from the international market sometime between April to June this year. They have nominated some international banks to advise on this. We've seen successful bond issued by our neighboring countries, Cote d'Ivoire and the Benin Republic. And considering that Nigeria is an oil-producing nation, we have dollar receivables. However, because of the pressure that we're already facing in the FX market, we might see the investors who will be willing to invest in this market looking to invest at higher yields. So we might see the rates at this auction closing higher than what our neighboring countries in Cote d'Ivoire and the Benin Republic would have gotten in their own when they issued their bond. Where the expected size for this auction is about $1 billion, and we would know that this would go a long way in improving the country's foreign reserve and meeting the backlog of the FX obligations that the central bank has committed to various customers before now.
Right, Uzor, thank you so much for your time. We appreciate your insight and, of course, bringing us up to speed on trading at the fixed income and FX markets here in Nigeria. That was Uzor Anakebe, Treasury Team Member at Access Bank.